Is it okay if I have a little bit of fun tonight while we do this presentation? Okay, now that worked. Okay, I believe that. All right, so let's do the State of the Union address. And basically the way that I broke down this presentation is I'm going to talk a little bit about what's going on in Texas, and I'm going to talk way more in a lot more detail about what's going on here in Austin and how well we did last year and how well we're expected to do this year. Historically, this has been one of our most highly attended meetings that I've ever given, and I'll tell you why. It's because I started to give this meeting back in 2007 when the market started to change. And everyone wanted to know, when is this downturn going to be over? And everyone was really very interested in that. Now that the market's been up for the last 4 years, people are like, well, this should be a 5-minute presentation, right? Right? Should it be? No. Why not? It's not that simple. Why is it not that simple? Because there's a lot to it. Why is it not that simple? Different strategies. Why is it not that simple? Things change. It's called a market cycle. It's called a market cycle. And don't you kind of want to know where we are in the market cycle? Yes, you absolutely do. And I'll tell you why you want to know as we go through this presentation as well. Because we've had 4 really strong up years in this Austin real estate market. What's a typical market cycle?
Up, down, up, down.
Up, down, up, down, yeah. What's the time frame on a typical market cycle? 4 years up, 2 years down, 4 years up, 2 years down, 4 years up, 2 years down, 4 years up, 2 years down. What year in the upcycle are we?
4.
We're 4. Do you want to listen now? Yes, you want to pay really good attention now because you're going to want to know where the market's going. So let me just tell you a little bit about how well Texas did in 2014 in general. We added over 460,000 jobs. What he said. Guys, please be respectful of the other people who are here. I know you want to chat and network, and I promise I will let you chat and network over beer. And I know beer makes people extra talkative, so but if you could be respectful, we'd really appreciate that. So Texas had an annual growth rate of 4% versus only 2.2% for the rest of the United States. The state's non-government sector added over 422,000 jobs, also 4.4% growth rate. And our seasonally adjusted unemployment rate fell to 4.6% from 6% last December. 6% is usually listed as the full employment rate. They say if unemployment is at 6%, that's sort of a normal sort of give and take in the economy. So to be at 4% is really incredible. In Austin, I looked today when I Googled up the Austin unemployment rate, it said the leading number was a 3. Which is incredibly low and incredibly strong economy that we've got here working for us. When you look at the unemployment rates by the major metropolitan areas, or excuse me, the employment growth rate, you can see where Austin is in terms of how many jobs we've added or the percentage of growth that we've added over the last year. We're ranked number 11. But we're still added an incredible amount of jobs, and we're definitely adding an incredible amount of people who are coming here and moving here every single day. When you look at the share of jobs that Austin has versus the other major metropolitan areas, we're ranked 5th versus those other major metropolitan areas. We actually did slightly go down from 2014 to 2013, but just ever so slightly. It's not a big enough of an impact to really watch because we're still growing jobs. It's just some of the other areas are growing jobs at a higher rate than what we're growing them at. Same for the unemployment rate. You can see in some areas like Midland, Odessa, the unemployment rate has a leading digit that is a 2, which is incredibly low, unusually low, record-breakingly low. Even where we're at right now, with a leading digit in the 3s, it's pretty amazing here what we've done with the economy locally and in Texas. And of course, what we all care about is construction, right? Because what do we use construction for? Building houses. So you can see building inventory, of which we have very little right now. So you can see where the construction trend has been going over the last several years. You can see when the growth was negative back in 2011, and where it started to turn the corner in the middle of 2011 and really started to hit a major uptick in Texas overall throughout 2013 and throughout 2015. So we're definitely building not just single family, but multifamily, industrial, office park, et cetera. And we've got this market has a lot of legs to go on it as well. When you look at our annual employment growth rates, we've seen a big uptick through 2013, but the 2013 numbers through the end of 2014 numbers are just not as good as they were prior to, but they're still pretty good, and companies are moving here like crazy to relocate some of the corporate headquarters, et cetera. The housing demand cycle, so this looks at the number of houses that we sold since 2006. And what I did here is I put all 4 major metropolitan markets. So we're looking at Austin, Houston, San Antonio, and the Dallas-Fort Worth area. And you can see they've all kind of have the same W curve right here. What is this little W the indication of? This chart goes back 2006 through the end of 2014. Why is it a W? Why does that make sense in a market cycle? Why does that make sense that we had this little bitty up right here that was about a 6-month to a 1-year up, and then we went straight back down? What was that? This is like Trivial Pursuit for real estate investors time. Yeah. The tax credit, the $8,000 tax credit. Thank you. Yes, I knew someone was paying attention during that time. So all of these markets saw it. So when you look back at the data and you see that weird little blip, because it is a weird little blip, you can think back to when the government put some stimulus in the economy to try and stimulate the housing market. And how well do all of these graphs show that it worked? It did not, right? It did not work at all. It worked for a little bit, but well, I mean, they stopped sustaining it. That's why it wasn't sustainable. It kind of had to naturally work itself out, but that's what we're seeing right there when we look at that little blip or that W curve over this particular time frame. When you look at sales price trends, you can see where we were going back to 2006, which everyone thought 2006, 2007 was the top of the market. That was the top of the market for us in terms of housing demand, so the number of housing units that sold, but it was not the top of the market for us in terms of sales price. Sales price. Texas, Austin was never in a real estate pricing bubble like many of the other states around the country were. However, because so many people were moving here from other states, we were in a volume bubble. And you could see where that volume went way down. So the top of the market, Austin was trading about 27,000 units. At the bottom of the market, we were trading about 18,000 units. That's about a 1/3 haircut. And it was intense. But during that 1/3 haircut, when you look at the pricing chart, you don't see that same level of decrease in the terms of average sales price as you saw a decrease in the amount of volume. So we were able to more or less maintain our average sales prices, and we've gone up and recovered even from sort of that flat period, if you will. And all the major markets in Texas have seen that recovery and seen that recovery at the same rate as well. So what's driving the recovery? What's driving it? Jobs, right? We've got jobs like crazy. And what else is driving it? Technology, healthcare, right? The kinds of jobs that we're putting in. What else is driving this recovery?
Cheap money.
Cheap money, low interest rates, right? You know, it's so funny hearing investors and home buyers last year crying over like, oh, I had to get a 3.75% interest rate instead of a 3.5% interest rate, and I'm so bummed out, and I was just, I could turn this up, but you probably still couldn't hear it, right? Interest rates, money is incredibly cheap right now. Money is incredibly cheap right now. And if you can buy a house for a 30-year fixed rate mortgage at 4.25%, 4.5%, you should do it as quickly as you possibly can. Because to have that money financed over that long time period at a fixed low interest rate like that, it's a no-brainer to invest that, whether it's in a homestead or whether it's in rental property, because that payment will be so much lower, you'll get a lot of extra cash flow. The other thing that's happening in Austin and all throughout Texas, whether we like it or not, is we've got about 150 people moving here every single day. And I think this little trick that they're doing on Mopac, which is really just like, let's slow down the traffic for a year and let's add like half of a lane and let's charge $4 each way for it. I think that would have worked out really, really, really well maybe about 5 years ago, right? At this point, we're at a stage where with the number of people that are moving in here, we need to double deck Mopac. I think that would be an effective solution, right? And all major roads, like 360. So I live right off 360. And some of the people in our neighborhood are talking about, well, you know, all the different improvements and different suggestions that they have for 360. And one of our neighbors just really hit the nail on the head. And it's like, until they make that, you know, a 4-lane highway, like anything that they do is just going to be laughable from the amount of growth that we're seeing. So transportation is a really big issue in Texas. Transportation is a really big issue in Austin. One of the myths about Austin that was verified, that was not busted, was that Austinites spend more time in traffic than in any other city in Texas, and I think in probably the top 5 in all the cities in the country, okay? That's how far behind we are. And I don't think that it helps that we are kind of this liberal bastion here, right? I think if we were a little bit more conservative, we'd probably have a little bit more highway money, but you know, that is what it is. And but that will come and get in the way of a lot of the future growth that we're seeing, because especially when most of the building is going to be happening where? Where's most of the building happening? Suburbs is the international symbol for suburbs, right? So since a lot of the building is happening in the suburbs, people have to have a way to get to and from these places, and if we don't have the right transportation in place, people are not going to want to go out there, which will increase the values of these more central Austin properties, but will also clog the roads more with all of these central Austin properties and all these central Austin roads. But really, interest rates, low unemployment, in-migration, that is what's driving our economy right now. And obviously the job growth as well, and I'll explain to you how well we did in Austin over the last year and what we forecast for 2015 as well. And I say we as the royal, meaning me and my team of unpaid economists that I get my information from, and I'll have source data down here for a lot of my slides too. For those of you who are like way more nerdy than me, you can go and look up your own data and put it in your own pivot tables and make your own pretty charts, because mine are not as, you know, I'll work on that for you. So the U.S. Census Bureau named Austin the 3rd fastest growing big city in America since 2000. And I know you guys feel it. I know I feel it every time I get in my car. And I know that we've seen it when we look at the number of houses that we've sold over the last several years, and the way that pricing has increased over the last several years, and the way that inventory has stayed really incredibly low, unfortunately low, over the last several years. If you have a house to sell, this is the best time in Austin to sell that house, unless you have to move someplace else in Austin, right? That's the problem. So. And some of you guys, I know I've talked to you who have said, I'm thinking about, you know, selling my house. And I said, well, that's, you know, it's empty nesters, right? And I said, that's great, but I highly recommend that you buy the next house before you do that, because you're going to have your house on your market based on where this person was living in probably about a week or less, maybe even in the same day. So the steady job growth and population growth has driven the increase in sales volume and the increase in sales prices as well. So what's going to remedy that? Guys, I'm giving you some hints here, like when I put up these charts. This is the interactive part of the conversation too. What's going to help our inventory situation? Yeah, new construction. So what do we want to look at? We want to look at housing starts. What's gonna change us from being in the upcycle to being in the down cycle? Inventory.
If you have an inventory explosion.
Inventory explosion. We don't have that. This chart says we do not have that. This chart says, in fact, it doesn't say it out loud, but we're still not building enough. Why is that the case? We've got the demand, we have no inventory. Labor. We don't have the labor. What else do we not have? Oh, we have land, but we don't have the land ready to put houses on. Right, because that takes a little while. Does anybody remember the story that the Austin American-Statesman did about 2 years ago about the City of Austin permitting office? They were 6 months behind in permitting. How does that help you guys out when you're trying to build a new house? It does not, right? And in the same way, I mean, for a lot of these larger developments, they had to put a lot of their projects on hold because they were waiting on the permitting process. What else is causing an issue with our ability to build more houses?
Water? Water? And
Wa-
that's part of the permit.
Water, yeah, water. What else? What else? Sellers have gotten wind of these price increases, right? And sellers are asking more money for their properties, so we're seeing that being an issue as well. And that's actually a driving factor of why all of our new builds are not as affordable as they used to be, right? Because we don't have the people here, we're having to hire people at a higher wage. And where are these people? Where are all of our construction people? Oil. They are in the oil fields. Where are all of our construction people going to be coming from if oil stays at $52 a barrel? From the oil fields, yes. So as soon as the labor market starts to loosen up from some of the job losses that we expect coming out of the oil and gas industry, because about a year ago, oil was trading over $100 a barrel. And this year, in fact, in the last 2 months, it's gone as low as about $45 a barrel, and now it's up. It's up to 52. That is not a sustainable level for these people to be fracking, and the cost for them per barrel is above that. So we're going to see some consolidation in that industry, and we're also going to see some job loss in that industry, and that job loss in that industry will feed a lot of the construction and the number of people that we're going to need to build these houses that we're looking at that we desperately need. Texas, Austin, so the Austin metropolitan statistical area, which includes Round Rock, these are the housing starts for single-family housing starts in Austin since 1980. This just very simply put, this is not even close to cutting it. This is not even close to cutting it. We should be well above the 16,000 marker, and the builders know that if they build it, the people will come because there's no inventory, right? So our average, where we need to be is we need to be building over 16,000 single-family units a year. And even though we had the demand for it, and we've had the demand for it, we've not been able to keep up. And remember, guys, this is just permits. A permit does not equal a house. A permit plus 9 months equals a house, okay? Sometimes longer, sometimes less, depending on rain and, the number of workers that we have, et cetera. But this is insufficient to keep up with the demand that we currently have in the Austin area. So the other thing that we want to look at is not just the single family, the SF housing starts, but we also want to look at the multifamily housing starts. And you can see the same trend with this is the same trend that's happened in the single family market, which is even though we've got a lot of cranes in the sky, do we have a lot of cranes in the sky? Yes, we do. We have a crane, and in fact, it's still a crane shortage, right? So we need even more cranes in the sky to build, again, the amount of demand that we need here in Austin. And guys, I do a market update for Austin, Houston, Dallas, and San Antonio. Do you think this market update is really that different in any of those cities? It is exactly the same. So what does that mean? We're competing with cranes. We're competing for cranes for cities all over Texas, all over Texas. And that means we're also competing for workers, labor, all over Texas. And they're going to go where they get the most money and they have the most opportunity. And all of these major cities are trying to get that done, and they are all insufficient at it. Most of the top 3 major metropolitan cities have less than 3 months of inventory. Market equilibrium, where it's not a seller's market and it's not a buyer's market, is about 6 to 6.5 months of inventory. So we're under half of what we would like to require to be able to get the job done, so it's not multiple offers above list price, sight unseen, on the same day that a house is listed. Now again, when we're selling, we love it. But when we're trying to buy something new, it can be kind of a pain in the butt. And it's stressing out a lot of the buyers here, and a lot of the buyers who are would-be house buyers are turning to rentals instead. And that's why watching the multifamily market is also very important, because as we add more single-family inventory, we're going to see some price pressure. And as we add some more multifamily inventory, we'll also see some price pressure. But it's going to take us a while before we're able to add enough inventory to get there. So in Austin, we have seen 4 straight years of volume increases. 4 straight years of volume increases. There have only been about 4 months where the year-over-year numbers were not higher in that current year. Only 4 different times. So we've had a very strong market that's been sustained over a very long period of time. This is the graph of the last several years, and you can kind of see where we went over and under. But if you look at the top blue line, you can see that 2013 was a great year versus 2012 and the others obviously too. But 2014, man, we just barely eked by with more sales than we did in 2013. And it was a battle right all the way up until the end. And that was a little scary. And for some people, they may say, well, that kind of is a predictor for me that the market is starting to change, that we might be going into a down cycle. That's what they would look at. They would look at that as being one of the leading indicators that the market cycle is about to change. Now, if you ask me, and I'm a student of the market, I do this market update every single month. If you ask me, this decrease in sales volume that we saw in 2014 was driven by one thing and one thing only. What was that?
Lack inventory.
No inventory. I can promise you, if we had more inventory on the market, we would have sold it. We would have sold it. Because right now, with about 2.5 months of inventory, the only thing that's left on the market right now are the 1-bedroom, 4-bath houses. Just let that sink in. Just let that sink in for the rest of you. For those of you who are new, thank you for laughing. For those of you who are old, thank you for not putting a tomato in my face, because you've heard me say that so many times. I do appreciate that a lot. So yeah, I think if we would have had more inventory on the market, we would have sold it, quite frankly. And I will say though, if we would have had more inventory on the market, our prices may not have jumped up as much as they did from 2013 to 2014. Okay, so there's a little bit of give and take. Thank you. I'm going to request a word, so this would be like the Wheel of Fortune at some point. Yeah, I'm going to have to buy. I forget a vowel. I'm going to have to buy a whole word. And Chris, it looks like I can depend on you, so I appreciate that. So 2014 outsold 2013 only by about 500 units, but the average price from 285 to 310. Holy, that's craziness. That is craziness. So for our for some of our coaching students, we actually do a little bus tour, and we go and we show all of our rental properties. And I create the itinerary for that, and I created that itinerary probably about 3 years ago. And I just created it, and I never changed it, right? Because the rental property that we have, we want to get wealthy over a long period of time, so we're going to have forever. And so Nancy was actually looking at the values that I've had on there for, I had what we purchased it for, what we put into it for repairs, and then I put what the ARV was, what the current market value was. And she's like, Shenoah, your numbers are off like by $40,000. So, well, it's because I haven't updated this itinerary in like 2 or 3 years. So, and it's gone up substantially. So, how many people in here hold rental property? Oh man, it feels so good right now, does it not? Yes, it does. It feels really, 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 really good right now, because for a while it did not. For a while when rents went down and when rents were flat, it did not feel good. But every time a tenant moves out, I'm raising the rents. And I've got multiple offers on my rental property as well, just because there's so much demand, not just in the house selling market, but also in the rental market, that we're seeing a big uptick in terms of rental rates right now as well. So take another look at your portfolio and see how it's performed over the last couple of years, and you're going to put a really big smile on your face. So because of this strength in the economy locally. So I'm going to talk a little bit about just December, the month of December numbers, and then I'm going to do the roll up for 2014, and go ahead and give you some more data, and I'll talk about, who is in here tonight? Is Esmeralda in here? Esmeralda's not here. Okay. Esmeralda and her partner, Harold, they always come to my forecast, and they bring my forecast from the prior year to keep me honest. So I'm going to show you what my forecast was for 2014, and I'm actually going to I'll give you the forecast for 2015, but I'll show you how accurate or inaccurate I was for 2014, and yeah, you'll get to see that. So, so December of 2014, average price above 311, which was a 6% increase versus last year. Median price almost 250, which is a 10% increase versus last year. We sold almost 2,300 units in December. 2,300 units. That is unbelievable for December. A lot of times in December, we were seeing numbers like 1,200, 1,300, 1,400 if we really kind of hit it out of the park. But almost 2,300 units represented a 14% increase over what we did in December of 2013. And at the end of December, we had 2.2 months of inventory. We're basically running at about a 40-year low in terms of housing supply right now. And so is the United States. The United States is below sort of that, as a whole, is below the average, or not the average, but what's needed to kind of have a nice sustainable market. So I've skipped over months of inventory. For those of you who are new to that concept, months of inventory represent if sellers stopped listing houses today, and we just had the current inventory of the 1-bedroom, 4 baths, right? And based on the current demand that we have, right, in 2.2 months, we would be completely out of inventory for sale in this Austin market, okay? So a lot of times when people are looking at whether or not I should buy a house, what are some of the questions that you might ask a realtor? Schools? As an investor, what questions do you ask a realtor? Rental rates? You're thinking about buying a fix? Come on, guys. You're thinking about buying a fix and flip property. What do you ask a realtor? Comps. What can you sell it for? What else? Days on market. How long is it going to take me to sell? What else do you ask? What the trend is?
Yeah.
I like that. What else?
What's the neighborhood expectations?
Neighborhood expectations? I have never asked, You guys told me I could say what I wanted to say up here, right? I have never asked that question to a realtor. Oh, okay. So full disclosure, licensed realtor and broker in the great state of Texas, license number 0518223. Now we got that done? Are we good? I'm not your realtor, though. Everybody got that, too? Okay, good. Okay. So she'll ask if you can take a cut on your commission. You're going to be the person that none of the realtors in the room come and talk to tonight, just in case you want to know, Paula. It's going to be you. One of the things that I look at personally when I'm looking at whether or not to invest in a property is I want to look at the comps, right? I want to figure out what the ARV is, what the house will sell for after I've completed the remodel. I want to know how long it's going to take to sell, right? So I'm going to ask the realtor what are the days on market. But I'm also going to ask the realtor. I'm going to look it up myself. But I want to know what the months of inventory situation is. Because I told you, on average in Austin, it's 2.2 months of inventory. Right? That's good. That's fast, right? But there are some areas in Austin, specifically 10S, which is 78745 south of William Cannon, gated by I-35 and MOPAC, right? That has about 2 weeks worth of inventory. 2 weeks, if that. But there are parts of the Austin MLS area that have 18 months of inventory. But did you know in those areas of Austin where there are 18 months of inventory, what do you think the average days on market are? No. Who said that? Who said 18 months? Who said 18? You think you're pretty smart, don't you? Think you're pretty smart? Let me tell you something. You are dead wrong. You are dead wrong, and this is where it gets really important. Because I can tell you that in those areas that it's 18 months of inventory, on average, those houses are selling in less than 4 months. So you go and you talk to your realtor, and you say, well, how long is it going to take me to sell this house? And your realtor says, well, on average, days on market, 120 days. You think, far out, that's awesome. I can handle my holding costs then for 4 months, right? I can pay my hard money lender for 4 months, and I can feel pretty good about that. But what if I told you that your total liability of how long you might be holding that property might be 18 months? Might that change what decision you make on that property on whether or not to buy it or at what price to buy it? What happens over an 18-month period when you own a house? Prices change. You also get to pay the tax man, right? And if you've got $1 million property, say in Lakeway, right, you're going to be paying about $22,000, and you're going to get that little love letter from the Travis County Appraisal District come about October 15th. It's going to be due by January 31st. Otherwise, they're going to put a lien on your property and start with fees, et cetera, right? Do you want to know what the months of inventory are?
Yep.
You're damn straight you do, and it's even more important than knowing what the days on market are because it indicates what your total liability is as a real estate investor, and it tells you what your holding costs could be in the event that you were one of the unlucky ones that didn't get sold right away. Okay? Days on market, that only talks about the lucky houses that get sold right away. Months of inventory looks at the actives, looks at the, and ultimately all the properties that are going to be withdrawn or expire without selling. Don't just look at this number and say, well, hey, Shenoah told me it's 2.2 months of inventory. Life is good. I can do any house in Austin. I can handle the holding cost, right? You need to, real estate is local, right?
Sir, you pulling that up by the area in the MLS?
This is average for the Austin area.
Yeah, but I mean, you could pull it up like 10S.
You could pull it up. So
just that area.
Austin Title does a 29-page report every 2 weeks that lists the months of inventory by Austin MLS area. And there are about 85 different MLS areas in the Austin MLS. So you can get to that level of detail. Is that good enough? Austin Title.
What area was the lowest?
10S was the lowest. It had about 2 weeks of, it had a half a month of inventory. Say that again? Lakeway, $1 million plus. Yeah. Horseshoe Bay, $1 million plus. Any of these sort of out Lago Vista, $1 million plus. There's probably still to this day, I don't know, 20 months of lot inventory in Lago Vista. And I promise you, if you are a real estate investor, at one point in your life, you will get pitched a lot in Lago Vista. Okay? Which will be great, except you're going to have to pay taxes on it for, I don't know, maybe 2 or 3 years, maybe longer. They're absolutely building, but if you look at the months of inventory, again, I'm not talking about whether or not they're building. You know, someone may be building and not be smart about it. I want you guys to build and be smart about it, and I want you to understand what your total potential liability is, and that's why I'm making this, making such an example out of this point. So on average, homes spend about 55 days on the market. We only have 5,000 active listings at the end of December. That is just nothing. That's nothing. At one point, at the bottom of the Great Recession, we had about 12,000 houses listed. So it's a big change from where we were, and at that point, we didn't have as much demand as we do now. So at that point, we had about a yearly demand of about 18 to 20,000 units. Right now, we have a yearly demand of about 27 to 28,000 units. So this inventory situation is really having a big impact on us. Guys, I don't think we're in a volume bubble. In 2004, 5, and 6, we were in a volume bubble because people were moving here and speculatively purchasing houses, right? But I can tell you right now, we are in a pricing bubble. The pricing bubble is driven by supply and demand and the lack of inventory. It's the supply part of the supply and demand thing that I just kind of put that together. Townhouses and condos. Why do I break these apart separately? Why do I break out townhouses and condos separately?
From single family, you mean?
From single family, I mean.
Because they're not
Different rules.
shared.
What, you guys have heard, I don't know if it's an allegory or some English major is going to tell me this. It's not an allegory. It's like, this is a true story. The canary in the coal mine. What does that mean? Why did miners bring canaries with them in the coal mine? Because they would die first, right? They would die, and then they would tell the miners, get the hell out of here, right? Why do you think I report on condos and townhomes? Because when they die, that's when you want to get the hell out of here, right? Condos are the canary in the coal mine. When the market goes up, they're the last market segment to go up. When the market goes down, they're the first market segment to go down. That's why I care about and break this out individually. Do you guys care about that?
Yes, ma'am.
How about the rest of you? I hope so. I certainly hope so, guys. I'll tell you, so I did a Houston market update this past Tuesday. And I was doing some research on the Houston Association of Realtors and the president, and this is really just like the cheerleading association for the housing market, the Association of Realtors. It's always good and happy and everything's great, right? So they were saying, well, we don't expect oil, the reduction in oil prices to have any impact on the housing market until at earliest, summer of 2015. Just because right now unemployment in Houston is still like at 4.1%, right? So they have some opportunity to give back without getting hurt. But she says this, and then she goes on to say, but for the first time, we saw a decrease in condo sales in January. Oh, really? What does that tell you guys, right? Does that make sense to you now? Yeah, it's the leading indicator. It's one that you certainly want to watch And you know, all the builders that are putting new condos downtown, what's their goal? What's their goal right now? Say it again. Finish first. Hold on. Don't finish last, right? Because the condo association that finished last, that's not going to be good, right? Unless they pre-sale. But gosh, you know, I remember in 2007, someone I had met was doing some investing in Austin, and they were really excited about it. They had just put this condo under contract. And not a real estate investor, right, but investing. You guys hear people that are not real estate investors but invest? Let me tell you what they do. They put a $50,000 earnest money deposit on a condo. Oh my gosh, you did what? So she put a $50,000 earnest money deposit, and she was out of her option period. That's why I'm like cringing so much. She was still in her option, I'd be okay. And she's like, well, what's my opportunity to, you know, kind of resell this and make a big profit, right? In the next, you know, 6 months to a year. Like, I'm going to rent it out for a year and then I'm going to resell it. And I said, listen, and this is a hard thing to say, but I had to say this a lot around 2007, 2008. You'll financially be better off just walking away from it. Walking away from it. Unless you can hold it through a market cycle or two. A market cycle or two. So if she was, and a lot of times as a real estate investor, we're using somebody else's money, and we're using someone else's money we're using like hard money a lot of times, right? So we expect to get in, we expect to get out. We don't care what interest rate we're paying, we're just going to own it for 6 months or a year. When you plan on holding it through a market cycle, you better have permanent, fixed, low-cost funding in place, right? If you can, you know, real estate investors don't get rich just buying and selling real estate. They get rich holding property in between market cycles. That's how you get rich. Here you can make money. You're not going to probably get rich. But if you go through this, because what's the added benefit of going through a market cycle from a tax perspective? Capital gains. And capital gains rate is right now at 15% plus
Depreciation?
plus Obama, 3.8% if you make over like 100 grand, right? That's a little gift to you to pay for somebody's like, I don't know, whatever. But still, that's cheaper than the income tax rate, right? So we're happy to pay that, and that's one benefit of holding through market cycles for sure. But in Austin, right? So I told you about the Houston, and we're seeing the canary in the coal mine start to, you know, not look so good in Houston because of the gas prices. But in Austin, we saw a 6% increase in December. November, we actually saw a decrease, but we made it back up in December. Median prices for condos up, average days on market for condos 55 days. So these things, 50 days, 60 days on market, that's like technical term, selling like hotcakes, right? I mean, that's really moving very, very, very quickly. Yep, so let's see, the leasing market. So this is something I'm a big fan of because Phil and I own 18 single-family residential rental properties in Central Texas. So leases, the number of leases that occurred on the MLS were 17% higher in 2014 than they were in 2013. And the median price for the lease was $1,450, which is 5% more than it was last year. So median price, what's always higher than the median price? The average price. The average price. Average price for a lease in Austin is probably closer to $1,650 a month. The median's lower, as in the same way that you see that the average price in Austin's $311 and the median price is under $250.
By the way, those are single-family homes at that range? Or is that just everything for rent?
That's everything for lease, yep. So the Austin full year results, 2014, slightly exceeded 2013 by about 500 houses, or about 2%. It did set a new record for the number of houses sold in Austin. Last year in 2013 was the first year since 2007 that we sold more houses than we did in 2007. Okay, that's the volume bubble that I was talking to you about, right? So we were going from selling about 27,000 houses to 27,200 for the first time. We beat it in 2013, and 27,768 in 2014. So we're still seeing growth, but we're seeing this leveling off of growth. And it's something that I'm going to continue to monitor as a real estate investor. Now, how is this going to change my real estate investing if the market goes down? How is it going to change?
Using more quick flips instead of holds.
I want to get in and out as quickly as possible. I want to get in and out as quickly as possible. I'm not going to go build a development starting today. I want to get in and out as quickly as possible. And right now, if you ask me, well, what does that mean to you, like in terms of months today? I want to get in and out. I mean, everything I do, I want the velocity of cash. Velocity of cash. I want to turn over my cash as much and as quickly as possible. I will not invest in anything from a fix and flip standpoint that's in an area that has more than 4 months of inventory. Because I can. Because I get a lot of deals, and I can pick and choose which deals that I want. Yeah. So I want to turn my money as quickly as possible because I don't want to get caught at the end of the upmarket cycle when it's about to maybe kind of change. And some of the things we can affect here in Austin, or we affect in Austin from a microeconomic standpoint, but some of the stuff I can't necessarily affect, like what's going to happen with oil and gas prices. So in Houston, for example, I went to the Angelos Angelou economic forecast in January, and Angelos forecasted that Houston would lose 150,000 jobs if the oil prices stayed the same. Are we insulated from that here in Austin, Texas?
Somewhat.
Somewhat we are. The economists are predicting 150,000 job loss starting in 2015. That doesn't mean everything will happen in 2015. And that depends on whether or not oil prices stay at the current level that they're at. If they stay at the current level they're at, we will lose some jobs, and that will have some effect on us here in Austin because there will be some overlap. It's hard to say exactly how much, but even if some of that did overlap into us, we are still in a situation where we have such little inventory, it would be hard to see that it would have a huge effect here in Austin. Now, that being said, where do people in Houston go when they lose their jobs? Dallas, number 1, right? Austin, number 2, San Antonio, number 3. So we will have more people coming here looking for jobs, so our unemployment rate might raise, but we'll also need to house all of those people. Do you guys know the economist salute?